Hey, what's going on, everybody? Chris Franks with TexasWest Capital. I got my friends there, Andrew and Tillman, sitting in the wings, about to pull them up here. Man, we got, things to talk about. It's always something to talk about Bitcoin, especially when it seems to get boring, or at least when the price action does, right? Andrew and I were discussing that backstage just a minute ago. So, as usual, we'll have something to say about it. We'll try not to upset you too much, but, we can't promise anything. As always, hit the thumbs up, hit the like, hit the subscribe. Do me a favor, share the link, guys. It takes like 2 seconds to do it. It helps us get out there a bit. I think what we do here with the show is really great. We just kind of give some real, multi-decades of experience across, Bitcoin, across markets, across TradFi, across mining, all that stuff. And, so you're getting guys up here that have, extensive real world experience discussing these things. So hopefully that helps y'all out there a bit. So anyway, without any further ado or hubbub and whatnot, I guess we'll bring up Tillman and Andrew here. What are you guys doing? What are you up to? How are y'all?
Hey.
Oh, that was perfectly timed. The twins are here today, apparently.
Hey.
Suffering Colorado allergies over here. It's allergy. We're in full bloom.
Tillman's bringing his allergies on the show for you guys. So
it's brutal. It's brutal.
It's tough. It's tough when them seasons change, man. You get out there and all of a sudden nature thinks it's time to say hello. And, while it's nice to look at, it isn't quite so nice to see, I guess you could say, right?
Yeah, well, it's not too bad. I only get this bad about 3-4 weeks out of the year. So
what's a month out of a year of your lifetime every year?
That seems pretty easy these days. A month of pain. I mean, come on, we can endure a lot more than that.
Oh man. So man, anyway, I guess kind of the bigger news here is, Bitcoin. I mean, I've been talking about it a bit, we don't talk about price a whole lot on here, but it does appear to be this kind of accumulation range down at the lows. It looks like it wants to break out higher, quite potentially here, maybe even today, 88.5 or whatever is that last lower high. So that's got that, which, it's kind of interesting because now we've got, I think it was Shapiro over at the Bitcoin Policy Institute, who kind of made a little bit of waves here when he said, hey, guess what? Well, I'm going to say the number 1 million again. I'm going to say it again just because y'all hate hearing it. And he said, Bitcoin could hit $1 million if the U.S. buys 1 million Bitcoin. And then in the article, he kind of goes, in the interview, he kind of goes in and talks about how they could do that budget neutral, because that's what, that was what the order said, right? It said, you can acquire Bitcoin, but you have to do it budget neutrally.
It's extraordinary. You mentioned, Bitcoin, to kind of trundle along. It's extraordinary that we're able to say things like Bitcoin consolidating at the lows at $84,000.
Right. Yeah.
$84,000. Like, I understand the sentiment of, people that have not believed in Bitcoin, because I just had this thought the other day, because I've got, old screenshots on my phone of, Bitcoin at 3,800 or 66,000, 6,600 or 8,100. And it was, it was on a day where it was skyrocketing at 8,100. And even then, if you're just, a normie, you're thinking, geez, $8,000 for, a Bitcoin. And here we are at $84,000 for a Bitcoin. Okay. And in our little world of influence, we're saying, consolidating at the lows of 84,000. Like that, there are moments where I'm struck with like where we're at and what we're doing. I mentioned this on Melker's show earlier this week when we were on with John Deaton, and we go back just 12 months and we were in a world where, unless you were a Bitcoin ETF or an Ethereum ETF, basically anything and everything you were doing in the crypto space was borderline illegal. Borderline illegal. If you were a decentralized exchange, it was illegal. They were suing Uniswap. If you were a centralized exchange, Coinbase, suing Coinbase, Gemini, Kraken. Everything that was happening other than a Bitcoin ETF or Ethereum ETF was illegal. And now we're at the point where there's this, the 180 that's been done and putting ourselves in position to build and grow. The last time I talked about the BIDL portfolio that BlackRock has put together, it had gone from 500 million to a little over $1 billion. As of yesterday, that BIDL portfolio is now at 2.3 billion. So it's 2x'd again. It's 4x'd from when we first started talking about it. And again, a reminder that those assets inside of that portfolio, Aptos, Avalanche, Polygon, and some others, they haven't gone up by 4x in terms of price.
Right.
That is institutional money going into that fund because they know and believe that BlackRock has a history of building stuff that lasts and ends up making people a boatload of money. So you go from 500 million to $1 billion about a month and a half ago when I mentioned it on the show to now 2.3 billion as of yesterday. That's a direct correlation to where we were 12 months ago from a regulatory standpoint to where we are now, which is just complete wide open spaces. And again, to your point, we're consolidating at the lows at 84,000. That is, a remarkable thing.
Well, and meanwhile, everything else is acting more volatile and more like Bitcoin in the past. I mean, the traditional stock market, it's been as wild of a beginning of a year as I can remember. I mean, it's been unbelievably choppy and violent both ways, and absolutely deck clearing on both sides. And we did some regression analysis to look at how big these swings look compared to historical swings. And you're talking about like 3 out of the last 5 in the 25-year period have happened in the last 12 months, like the biggest moves. So you're talking about a lot of volatility in the traditional space, and Bitcoin acting like it has a bottom, like a absolute bottom, like a buy pressure bottom to it. And that's very encouraging to me. I mean, it's exceptionally volatile and choppy right now to the downside in pretty much every market other than gold and Bitcoin, right? And so, that's a telltale sign that you can manipulate Bitcoin's price for short periods of time, but you cannot hold it down over long periods of time and manipulate it forever, because it will uncouple from whatever other asset you want to compare it to in the long term. It's very encouraging to me. What I do see happening is I think somebody said this week that I think Kathy Woods said Bitcoin's been less volatile over the last 12 months than it's ever been. And the volatility is continuing to shrink. Well, I don't know where that ends up, but I do remember Michael Saylor one time saying that he believes Bitcoin will eventually settle at the S&P plus 12 to 18% as kind of a standard incline. And where you'll find the alpha will be in the derivatives and the leverage plays below the base commodity, which is Bitcoin. I see that happening right now. I mean, you're starting to see that stability and that constant buy in the Bitcoin space. You see 8 times the cash being spent in the Bitcoin futures space than you see in the spot market. The signs are all there that we're starting to. It's been commercialized. It's been Wall Street, commoditized. And what is good about that is that they're going to build tons and tons of derivative products and other vehicles beneath it. What's kind of bad about it is if you're used to playing Bitcoin the way that you've played it in the past, you probably are going to have a new education in what the new rules are, because I don't see us dipping like we did. I don't envision a world, and maybe I'm wrong, where we see another $30,000 Bitcoin. I just don't. I see too much demand between 30,000 and where we are. So So, I think the games have kind of changed, I think.
Look at that, Tillman making the bold predictions right off on the show here already. But I like it. I like it. And it's kind of interesting that you brought that up because, for those that don't know, I've got a free weekly newsletter goes out called The Market Breakdown, and that's been on hiatus for quite a while now as I was getting some other projects taken care of. But we're relaunching today. And so in that, in the section where I'm talking about Bitcoin, I actually make this point that we've got the DXY dropping, we've got gold popping, and Bitcoin's just kind of hovering, right? And that seems to me to say that the money coming into Bitcoin is more about broken trust, in the monetary system and whatnot, versus versus people getting into it for, the money that can be made on the rallies and whatnot, which, like you were saying, the way we traded before was like, man, we're going to have these big, huge moves up and get it in there. And if you look at it now as more of a sovereign play, right? More of a sovereignty play, more of a broken trust in the financial system and stuff like that. Well, that kind of underscores what we've been talking about. He wanted to wear it last week, I'm sure. But anyway,
that becomes you. That really does.
It's tough, right?
If we're going to talk about DXY drop, pop, and locking it, I've got to put on, a tinfoil hat. We're DXY this and VIX that, and it's only a matter of time till we pivot to whole life. You know what I mean?
Mr. Smith says it helps the Rogate work better.
Bitcoin.
But really, so when we look at it, again, this is the narrative. We've been talking about this since the show started back at the end of May of last year about how the narrative for Bitcoin changed at the beginning. I don't want to see what he goes back with. How the narrative of Bitcoin changed, 2 Januaries ago when the ETFs opened. And so, I think if you're not paying attention to that, I think you're going to get burned somewhere. You're going to feel like, oh, it's not doing what it should. Oh, and you're going to start taking your ideas of what Bitcoin is and what it can do based off this really bad way that you're looking at it, which we used to look at it, which again, going forward is not quite the same way now. So I think that was a lot of confusing speak there, but basically I'm just saying it's changed a bit, guys. Now that we've got so much of the inflow coming from, companies.
Well, here's the way I'll boil it down to simple actions that I've taken. I'm not going, in previous markets, there was always this cycle of liquidity that was rolling from Bitcoin gains into Ethereum gains, into Solana gains. And it was like everybody just was chasing the next. And if you were lucky, you were ahead of the chase and you made a lot of money on pretty much everything. If you were behind the chase, you lost a lot of money chasing and, basically being the exit liquidity for people. I think the difference that I see in this market and the way I'm going to be playing it differently is I think Bitcoin dominance numbers continue to go up. I think there's going to be, what's the market worth now? $2.5 trillion or something like that.
Like that, yeah.
I think if you look at Bitcoin being, the majority of that 63% last time I checked, I think that number is going to go up to 80-90%. And I see that the other projects that survive based upon utility will also go up a lot and catch a lot of the money of the consolidation of the market. I think we're about to have a consolidation of the market, and that's where the liquidity comes from. People are asking all morning. I just got off of another podcast where it was like, where's the liquidity going to come from?
Yeah.
And I think that's where it comes from is that we pull in to more value-based propositions and not such speculative-based propositions. And, you see that happening now, but in the crypto space, there's still a long way to go.
Yeah.
And I would think that we're going to see that dominance number go up, which is going to tell me, okay, stop chasing yield or stop chasing plays outside of the Bitcoin ecosystem. Start looking at where the alpha lies inside of Bitcoin itself, and not just spot, but the futures, the options that can be played, like owning MicroStrategies, like what is available inside of Bitcoin. Because if you can capture volatility in side markets while having your core value in something that is now proving to be very stable in unstable times, I kind of think you have the best of both worlds. That would be my 2 cents, my take.
Yeah. Again, the Bitcoin dominance thing, that's funny. I had a lot of people talking about it's topped out. I mentioned that I was expected to head up further. I don't know that it hits 90% personally, but again, I've been saying for a while now that we were going to get dominance continue to rally. And that's really kind of in line, this whole thing we've been talking about, narrative shift on Bitcoin, looking at the dollar, the DXY there, which is, again, doing what I was talking about, which is this drop, right? And we should probably, it seems like we'll probably see that heading down to the low 90s, maybe even lower eventually, while it continues this kind of pull. But I guess the bear market, you could say, for the dollar. But
if we keep doing this podcast for the next 2 years, we're going to be talking about Bitcoin bonds, Bitcoin mortgage indexes. We're going to be talking about, again, there is a reason that in, commentary, Larry Fink has mentioned, Bitcoin's market and the opportunities there is akin to the beginning of the mortgage market, several decades ago. Well, what does that mean? That doesn't just mean market cap. What that means is there's 90 different ways to slice up mortgage debt so that it is a marketable byproduct associated with the scale of that market, right? So if you think about that, where did that go? That went in so many directions that we ended up having a contagion associated with layers upon layers upon layers upon layers upon layers upon layers of collateralized debt obligations and insurance associated with those. And it turned into the great financial crisis of 08, 09. So if we get even a 10% of that stuff with Bitcoin, which I assume we will, which is why Larry Fink mentioned it, which is why BlackRock is in the business of Bitcoin at this point. Again, we'll be talking about bit bonds. We'll be talking about bit mortgages. We'll be talking about savings in Bitcoin associated with traditional banks. We'll be talking about all sorts of stuff that we're not talking about now. We talk about price right now. We can talk a little bit about the opportunity to arbitrage the futures versus spot price. We can talk a little bit about what the government may or may not do. But I'm telling you, 2 or 3 years from now, the conversation is going to be very, very different.
Yeah. Question, Mr. Smith says, do you think the rise of global acceptance of Bitcoin is a part of a capture by the central bankers and globalists? And the answer I have is absolutely. And I think the next one that you're going to see is that banks on every single corner are going to be offering you incentives to let you deposit your Bitcoin there. Because having that Bitcoin is akin to having gold in the gold standard days. It is the ability to lend and borrow. It is the very liquidity that you have as the foundation of the value inside of your institution. And so I see Bitcoin outstripping any other offsetting commodity or any other asset class as it relates to banks being able to keep up or push more money out in the form of loans. There's nothing that's going to give you a higher multiple. So why wouldn't that give you a higher multiple and competitive advantage?
I did notice there was a request for tinfoil hats in the merch store. So Chris, if you can note that in the minutes of this podcast here today, that may be something you could capitalize on, right? It was also noted that there's not a pointy top, right? So we haven't gone full conspiracy yet. That happens when Chris releases his book, right?
It's coming.
Thing. The point will show up on launch day for his book. Okay, that's when that happens. All right.
You've heard it here first, guys.
I cannot wait to read it because I'm going to make reference to it at every single show.
Dude, I'm going to tell you, you're going to be surprised. I think a lot of people here probably hear, they go, "Oh, he's going to write a book. Oh, I bet that's going to be like crap." No, I think people are really going to be surprised. Philosophically, the questions asked and how they're approached and whatnot in that narrative universe. So, I think you're going to have a lot of stuff to pull out to kind of pull out of that. Not just that, but all the books that kind of come out of it. So, yeah, exciting times, right? Mr. Smith, I heard one of the books will contain a golden ticket with either one Bitcoin or a TWC lifetime sub. You never know. You never know. So yeah. But anyway, I don't know. I've still got in my head, even though he's got his regular hat on, I've still got the picture of the silver on his head now, and it ain't the color of his hair. That's for sure.
That's right. It's a good look. And 3 years from now, when we're dealing in bit bonds and bit mortgages, we all may be wearing silver hats. I don't know.
It may become the norm, right?
Silver may be so depressed in price that it's easy to get silver hats. You see what I mean?
Well, if you were back when Bitcoin, when I first got into it, if you had told me it was going to get to 85,000 and people would be complaining, I'd tell you I'd be wearing a silver hat too. It really does make you sound crazy once you play the game theory out of what Bitcoin can do mathematically. And but I think it hasn't been proven to not. I mean, it's almost like a mathematical certainty based upon what at University of Texas, I got a business degree, and you study through your degree, economics principles and supply demand, the things that drive markets. And if you understand that, I don't say I do, I say that I've studied it, but but if you really understand that, and some of the guys that I aspire to be as smart as they are, like Jeff Parks at Bitwise, they see a beauty in mathematics and a beauty in pure raw economics in a way that makes their eyes light up like nothing else on the planet Earth. So think about that. Like, if you can get a guy like Jeff to divert 100% of his earning potential into this one narrow channel of expertise because it's the best thing out there. That's the way I take my cues from really smart people, and that's the way I kind of look at it. Same thing with Larry Fink. Like, you think that guy doesn't know what he's doing? I mean, he's running circles around us. He's like Trump, catch me if you can. You're not gonna, is the point.
One note for the podcast here: Jeff Park is not a plural entity. His last name is Park, not Parks. So
yeah,
Parks is not a duality of any sort. He's not a spirit, and it's one person, one human. Jeff Park, not Jeff Parks.
Put your tinfoil hat on, and we'll have that conversation about multiple universes.
I was gonna say I was gonna clip this out and send it to Jeff, but then I'm like, no, I think I'm gonna clip the part out where he's got the silver hat on. And
yeah.
Listen, there is no way that there isn't more than one Jeff Parks. There's multiverses out there where he is doing, big. Listen, ask Elon. He's proven it through his supercomputer. There's dimensions.
For people that don't know, or maybe have forgotten along the way that we're kind of looking at Bitcoin is this idea that it becomes the base layer that supports liquidity. So, when you think of Bitcoin, you don't think of it as being the thing. You think of it as being the thing that allows the things to exist and to happen and to grow and to expand. And that's kind of where we come from on our point here, guys. So in case you were wondering, in case you were like, wait, what was he talking about? Liquidity or whatever? No, it's not Bitcoin itself. It's Bitcoin becomes that base layer for that liquidity, which is obviously a lot more structurally sound, it seems like, than pretty much anything else we've tried using right now. So
you said thing a lot of times there. Can you reconstruct that for me?
No,
Or,
no, I've had a tough week, man. You can
Okay.
ask them over there when I'm doing my classes and everything. I'm struggling, and I'll just stop and just be like, I can't even speak today. So, no, you guys listen. If I got to deal with your silver hat, you're gonna have to deal with me. Just
Rambling on.
pretty much.
Hey, I see that Fibo has joined us in the comments. Bit bonds get implemented. Wall Street's gonna need a diaper change because this system's about to shake the blank out of everything they thought was solid. Listen, again, we are in a position right now where all the signs are there that at some point bit bonds happen. Now, the question is, how do bit bonds happen? There can be different amalgamations of quote unquote bit bonds. There can be securities-based lending associated with Bitcoin ETFs. That's not necessarily rising to the level of quote unquote bit bonds that are closely tied to the the volatility associated with spot Bitcoin. But I think we probably do get there. I think we probably do get there in the next 2 to 3 years because, banks have been given the green light to be able to custody this stuff, right? You can custody Bitcoin and Ethereum, and Bitcoin is the most well-known. You're going to be able to custody it. So there are going to be banks that take make the leap and are able to, do the whole bit bond thing and lend against that particular asset that's on their balance sheet and sitting, as a custodied asset underneath their quote unquote, custody control, right? It's gonna show up. Stranger things have happened, right? I mean, mortgages existed, and then we ended up with governmental entities like Fannie Mae and Freddie Mac.
Yeah.
Well, it's already happening. Michael Saylor's doing this. I mean, you're not going to stop that train, right? He is going to continue to take the front edge of the development of products that leverage Bitcoin and produce yield. Like, yield is the nature of the game going forward. Because, and here's why, in my opinion, guys like Warren Buffett and Jamie Dimon and all of the big heads in the room of finance have said it's not a yield producing asset. That's the biggest beef they have with Bitcoin. It won't produce yield. It doesn't produce yield. And so, they'd rather own a cornfield because they can grow corn and sell it and have a yield on the property than own Bitcoin. Well, what happens when Bitcoin's performance creates so much upside that products capture portions of that upside and guarantee you yield on them? And then it provides yield. Then it is a cornfield that you don't have to spray with weeds, that you don't have to pay property taxes on, that you don't have to employ farmers on, that still give you the cash yield of the cornfield being sold. That's where we're headed, and there isn't one dang thing that any of us can stop Michael Saylor from doing it. He's gonna do it, and the guys that are out there that are builders like Jeff Park, they are building products that do the exact same thing, that leverage the yield functionality that can be harvested from the appreciation of Bitcoin or from the mathematical rise of the price of Bitcoin. I think that's the foregone conclusion in my mind, that every bank is ultimately going to be subject to that. To Fib's point, once that yield gets productized and packaged and available to everyone, that is the competitive advantage, and that does create the, in my opinion, kind of the gamma squeeze moment.
And it's already happening in small ways. So go look up Calamos, CALAMOS, right? So Calamos runs an ETF that guarantees your downside with Bitcoin. Now, your upside is also limited associated with this product, but it guarantees that if Bitcoin drops by X percent, you're not going to be in that X percent drop. You're not going to be in it. That's the nature of the fund, that they are protecting you to the downside while also limiting you to the upside. So this is already happening, again, in small ways. Think of it this way. So Calamos, just has about 30 million or so in that particular fund. Why? Because most people that want to hold Bitcoin don't want to be limited to the upside, right? At some point, this is going to be the quote unquote, bond interest rate arbitrage that'll be played. So it's already being played in a small way with an ETF that limits your downside losses, but also limits your upside losses. That in and of itself is a version of arbitrage being played on a percentage basis, quote unquote yield. So if you think about it this way, with this small little fund that's out there, Calamos, and 30 million or so in assets under management, go back 30 years, and there were a couple of small, tiny little companies that had started packaging assets differently than the massive, huge behemoth that was the mutual fund industry. The mutual fund industry dominated wealth management, dominated Wall Street, actively managed funds. By the way, they hardly exist anymore. Why? Because these tiny, tiny little companies said, well, I don't think we need to do actively managed. Let's just put a bunch of stuff into this little package, call it an exchange traded fund. Now you have instant liquidity because it trades all day instead of being marked to market at the end of the day based on the changes in the prices of the underlying securities inside of the fund. BlackRock saw that happening, bought one of those companies, turned into one of the two biggest ETF companies in the world, along with Vanguard. So it took off. In the same way, you have this little yield bearing stuff, limited to the downside, but also limited to the upside in an ETF. So it's already happening. The whole yield type experiment with Bitcoin is already happening. Now, again, why would this be happening? This couldn't have happened 4 to 8 years ago. Bitcoin was absolutely too volatile. No chance that you could put a fund like this together at Calamos, because there was going to be a 50, 60, 80% drop. Happened every cycle.
Well, you could. You just would have to strip out all the incentive. It still would be a better yield than a tax-free muni bond,
right.
But it's not going to be as good as the S&P or the Nasdaq or something larger that has still relative risk. It's still a better play. Now you're talking about if you strip out. Let's say you take where some of the largest wealth goes to bonds and tax-free municipal bonds, and those types of vehicles are typically the highest cash guarantee that you can get. And they're single digits. They do not cover inflation, right? They're just basically covering half of inflation in most cases. Unless you get into some higher risk muni bonds, like where they're doing major infrastructure changes and you're, getting a higher rate, but there's also going to be more risk. Compare that to what a bond backed with Bitcoin would do. There is no risk in terms of failure to execute. There is no risk in terms of exodus of the city and not having paying customers to cover your payments over the next 30 years in the private-public partnership. There's no risk in any of those executional items and there's a higher yield. So it becomes a more favored vehicle. And that is where you're going to see massive exits of liquidity when banks on every corner when they start saying, I will pay you a high yield for you to deposit your Bitcoin with me. And when they start doing that, because they know that depositing Bitcoin is going to guarantee them a larger spread to play with in terms of paying interest and borrowing and lending, it will be that moment where I do think, that Andrew mentioned earlier that, there's wisdom saying real estate values, this is the start of lending against real estate. Well, that means we're at 100x from here. 100x. So do you think Bitcoin can be $8 million a coin? Well, Michael Saylor thinks the worst case is 13, which would put it more than 100x. So, you never know, but we are seeing the signs that that it's going to happen. And I don't think that it's not going to happen because someone's forcing it to happen. It's because someone's now removed all of the barbed wire from it happening, and free markets get to respond to opportunity. And that's what Bitcoin's about, is the earlier you adopt, the more opportunity there is, period, the end.
Yeah. And so with that in mind, and Saylor doing his thing, I just saw an infographic the other day. I think I shared it on Twitter, that MicroStrategy is the 17th largest holder of Bitcoin in the world, and they're about to surpass Poland. So when we're looking at that, and I truly believe, what is he going to do? I think they become a bank, right? I think they're transitioning right now from their legacy market intelligence kind of business to a Bitcoin bank. And what do y'all think happens at that point? If that goes through and that happens, do you think we get followers? Do you think big banks change structurally? What do you think happens?
I think the U.S. government should nationalize it and essentially declare it a monopoly. That's my personal opinion. It's probably not a popular one, but there's precedents. Go back to when the Hunt brothers cornered the silver market. Were they allowed to continue accumulating silver? Were they? No, they weren't. They were not allowed to continue to accumulate silver. Why? Because it wasn't good for the markets. And what's good for the markets is good for the people. And that's what government is here to do, is protect what's, quote, good for the people. And so I think there will be a cutoff at some point if it already hasn't been surpassed. And I do think that if I'm in the seat of Trump, I'm talking to him about that now. There's a price. Like, he's already said his legacy is to leave his Bitcoin to the good of the people. Like, he's talking about burning it, for God's sakes. So why wouldn't he leave it to the country and make us the strongest country that's ever existed instead of that? And we can print our way out of buying all of that Bitcoin from them and make it a transaction that's too good for them to refuse. And it would inject a ton of money into the economy. Would you rather them print $5 trillion out of thin air for no reason at all, or would you rather them print $5 trillion and buy MicroStrategy's entire bag and nationalize it and let all that money float out into the economy through MicroStrategy's rich, shareholders? Like, it's easy for me. Like, they own too much, in my opinion, is the point.
What about you, Andrew? What do you think, man? You agree?
No. I would simply say that over time, oftentimes reality is different than best case or worst case, right? So you have best case scenario, worst case scenario. Reality lies somewhere in the middle. Are we going to go up to 150 to 250K? Yes. What's going to be the thing that pulls us back to 110 or 97 after we do that? It's probably going to be a MicroStrategy something issue. That would be my guess. You can't simply fly close to the sun, and not only fly close to the sun, but then just start doing circles around the sun. And at some point, your wax wings begin to melt.
So you agree that they own too much, but you disagree about what the final outcome is.
The thing I disagree is the final outcome. I think that there will be a reckoning at some point.
You think the reckoning is going to be impact the markets? Whereas
for sure, I think they will. I think that if we go up to 250K and then there's an issue with MicroStrategy and it pulls us back to 125 or 130, and then over time we drift a little bit lower down to the 90s, I could see that happening. I could see.
But there's no mechanism inside of that debt that's forcing them to sell BTC. So there's and Saylor, unless he, isn't the captain of the ship anymore, is not going to sell BTC. So the price is going to be supported based upon it essentially being burned in, for all intents and purposes. So the only thing that could impact price in your scenario is if there's an outside force like the government that forces liquidation, like you need to offset, you need to unload some of your BTC and essentially forces them to be, which I don't think is outside of the question. They forced the Hunt brothers to. But it's interesting. I like to hear your opinion about this because it's
well, it's no different than I don't have the answer, but what I do know is that there aren't two Jeff Parks. And so in the same way that type of thing is a strange thing to try and explain, right? That there may be two Jeff Parks, in the same way that there may be outcomes for MicroStrategy that we can't see or can't predict right now.
But why wouldn't you use historical events to kind of point an arrow towards what's happened in the past? Like, you don't think that you think this is far off from the silver event with the Hunt brothers, or isn't that kind of the exact same thing that happened?
Here's what I think. I think that the idea that Michael Saylor has an infinite money machine is that can't.
It doesn't work.
It's not going to work forever. It can't. Yeah. Whether it's somebody that wants to bring him down, or an entity that wants to bring him down, as you're saying, whether it's government or whether it's a larger entity than him at some point. BlackRock's hot on his heels. So there just are outcomes that we maybe don't want to see right now that I think are certainly longer term in play, whether it's 3 years, 5 years, 7 years. The idea that, Michael Saylor is going to become the richest man on the earth by a factor of 10, that's not going to be reality. It's just not going to. I can't. Is a world where he becomes the richest man for a moment? Sure, maybe. But currencies matter too much to large entities like, the United States, Europe, Japan, China. Getting to that spot with Bitcoin and then having some guy own almost a sizable portion of it as a percentage, there are forces that will be at work to undo that particular reality.
Well, and even the number on the paper is not real, because as we all know, when you own that big of a bag, you can't liquidate it without crashing the price. So it's like Elon's shares. Elon was interviewed one time, and it was really a great answer. They said, "How does it feel to be the richest man in the world?" And his response was, "I don't know, ask that guy." And he referenced a guy that, I think it was Putin maybe, or some world leader that had commanded a massive army. Yeah. And he said, "Listen, my wealth can be seized from me tomorrow. True wealth is how big of an army you have." And, that's really what it amounts to. It's like, the rule of the playground, the bully, whoever has the most might wins.
Now, listen, there are all versions of MicroStrategy, as it is, the most Bitcoin adjacent company on the planet. There's all sorts of opportunities to make money, to generate passive income, to do all sorts of stuff with the levers and pulleys that they're working with right now. But at the same time, nothing goes on forever. As I just mentioned, mutual funds ruled the world for 25 years. Previous to that, it was individual stocks that you basically owned or had money in the bank.
And the companies that played by the tightest rules, like Warren Buffett, what's one share of Berkshire Hathaway Class A worth? I think it's close to $1 million today. I mean,
it's a big number. But even Warren Buffett, again, so fly close to the sun. Warren Buffett, for the last 27 years, has underperformed the price of gold. He's underperformed the movements in gold. So you can't. That's my point. Is that 90% of the world that has even a passive interest in finance would know the name Warren Buffett, would know that he's this paragon of markets wisdom, and he's wildly underperformed for more than 2 decades. Something that I said several years ago on Twitter that, there was something about Warren Buffett saying this. And I'm like, why are we listening to this guy? I mean, he's 95 years old, way past his prime, but I get it. It's a name. At some point, that type of thing happens to a rocket ship. Like, a rocket ship simply doesn't go up forever. It can. It's the laws of thermodynamics, and those same laws, by the way, apply.
Well, it can at a compounding angle. And so you're like, if you want, like, I disagree with you in that. I think Warren Buffett is a product of him understanding math at just what compound interest does for you. And if you're outstripping inflation and you're doing it over a 60-year period of time, you're compounding interest on compounding, and it becomes inevitable. You cannot lose doing that. The problem is that human beings don't want to be rich 60 years from now. They want to be rich now. And so we chase the immediate, which, yes, gold has outperformed Warren Buffett in the last 24 months. But it hasn't outperformed Warren Buffett over the last 40 years. And so Warren's just taken the boring approach of stockpile compounding interest on compounding interest, yield producing companies that, have a high dividend, basically. And that over time, because of inflationary powers and because of profits, it just yields this machine. It's like Einstein said, compounding interest is the eighth wonder of the world. You either understand it or you're a slave to it. Well, Warren understands it, and he's just taken that boring approach. It's not the approach that I like to take, because it's like the selfless approach of days past, where you were setting up dynasties for your family because there was no such thing as death tax. Now that there's death tax, you can't pass money indefinitely to your heirs. So you got to make it while you're alive. And that's the most tax-free money that your heirs will ever get to enjoy and or leverage before you pass.
So there are moments where Tillman and I disagree on stuff, and inside our public. Chris, have you ever seen like National Geographic where two walruses fight, like two walruses like joust with each other, and they just kind of bump up against each other, and the size and scale just kind of makes all kinds of sounds. That's what it's like, when we do a little bit of back and forth. Just to give everybody a little bit of a word picture, you know what I mean?
We're different species, Andrew. That's very presumptuous of you. There is no. It's lion and gazelle, buddy.
I can't even with you guys sometimes, man. I can't even with you guys sometimes, but no, I mean, a lot of great thoughts in there, and I think again, what do? We can speculate. That's really all we can do. None of us knows, for sure what the future holds and whatnot. Kind of like when we're in the markets, and we trade and we invest, and we try to use our knowledge and experience from what we have in the past, and some logic, and try and figure out what's likely to happen. But at the end of the day, we don't control what happens, right? And
here's a thought, right? We believe, all three of us believe, that the sailor is moving towards a position where his company becomes a bank, right? When's the last time a bank like MicroStrategy that wants to be just continue to go up and up and up in value? When's the last time that happened? I don't know, the 1600s or something?
Well, I would argue because regulation comes in. Like, regulators stop that. That's how they stop it. And you can't be a monopoly. Like in America, we pride ourselves in understanding free markets require competition. And if you prescribe to that, then there has to be at least two people. AT&T and Verizon are a good example of that. You got to have both. You can't have one dominate the market without the government stepping in and saying, oh, if it looks like a nationalized entity, walks like a nationalized entity, talks like one, it might be a nationalized entity and they just absorb it. Like that is the natural process of government and growth. Eventually, they will deem it to be in the best interest of the people. No different than if something, what happens if you invent a technology tomorrow that changes our advantage on the battlefield?
What do you mean if? That's
Yeah,
coming
well,
out tomorrow.
my point is like there are thermal scopes that you can buy online that you can't take outside the country because it is deemed to be a product that is unfit to share with the rest of the world. And I think that I think government has a long track record of this. And it's like, pretty much, Andrew can undermine it all he wants, but Andrew is, you have to go to looking at who's storing up for the winter versus who is eating the nuts now. And the winter is coming, my friend.
Oh my God!
Not that I'm much for eating nuts, but if there's other food that I could eat before the winter, I'd be happy to do it.
Oh Lord, have mercy. Okay, guys, listen, we got a few more minutes here, real quick. So Van X floating around this idea of treasury bonds. You guys have seen that, right?
Yeah.
The bit bonds for treasuries, 10% Bitcoin allocation in that.
Mm-hmm.
Yep. Where do you think that goes? How far do you think that goes? Do you think it gets in? They do it? Do you think? What do you think happens here?
Inevitable. Yeah, I think if you can dream it, people are going to be building. Like Andrew said, we won't recognize the space 24 months from now. Period. Like it's going to be.
Well, just look how different it is since May of last year when we started the show, right?
Yeah.
Yeah.
You can't envision it. That's why it's fun to put the tinfoil hat on, because everything you have to not only think about the real estate market or think about, some of the other markets that people speculate in. It's pretty easy. It's like, where are the interest rates going? What's the population growth in this area? It's things that are readily available that you can predict, what the next 10 years looks like pretty accurately. Like, I lived in Nashville, I've lived in Austin. Both towns, we were all looking at each other going, we should buy every house in this town because everyone's moving here. In Bitcoin, you can't predict the next 3 months. You can't. I mean, it is just so any predictions past the next 30 days sound like crazy. But that's what's fun is that the game theory of mathematics. If you understand free markets, it's kind of like technology. If you ask anybody that's really into technology, where does this all end? They all say the same thing. It's one word: singularity, where your identity is merged with technology and you are kind of one with the machine. That will happen. Ask Elon. That's what the whole brain chip stuff that he's working on is about.
Neuralink, right?
but if you play that type of same game theory out in the Bitcoin space, it does become the best asset to provide liquidity for the world. Like you said, Chris, it's like, because of the scarcity, the proven scarcity at a global instantaneous level that cannot be forged or counterfeited, that alone provides the most stable indication against global inflation that's ever been created. That is it. That is the dashboard there's been a new light on the dashboard that's been created in your car, and it tells you global inflation, and that is Bitcoin. So the more money that's printed, the higher the price is going. That's the way, in my mind, it works. M2 money supply, go up.
By the way, it is really cool to see in the comments people that are using our algos, using our tools, using our Bitcoin algo. Like, there are people in the comments that are, looking at Bitcoin price being down a little bit, and they're like, come on, get to 2.1% so it triggers a trade. It's really neat to see that people are using the tool, again, an institutional level tool that you just can't find anywhere else. And they've gotten so in tune to using it that they're rooting for it to do what it is that it does on their behalf. It's just, shout out to the folks that are out there commenting. It's really neat to see that. We love to have you, and reach out to us anytime, all the time.
Yeah, absolutely.
Giving them warm fuzzies, guys. Look at this. You're giving the guys up here warm fuzzies.
Well, you play that theory out, like what we're talking about in a personal life. Like, our product is free to use for anyone, up to $10,000 a year. So if you're somebody who's going, hey, I want to spend a couple $100 a month, save and put towards savings my Bitcoin, you can use our product forever and never hit the threshold to ever pay money towards us. That is, in my opinion, what our legacy as a company is going to end up being, the greatest part of it. Because if I can get millions of people to use the product to accumulate some Bitcoin at the rate at which they can afford now, and what we believe does happen in the future, you're talking about a few $100s a month for a very short period of time turning into, mortgage paying off type money. That's huge. Bitcoin has this incredible functionality to it that you can talk to somebody who's been in it since the very beginning of time. You can talk to somebody who got into it last cycle or any time in between, and it makes you money over time. There's just, I don't know how else to say it, but you just wait long enough and you're really, really happy, and you're looking around at all the other people that took the ride with you, and you're happy with them. And, I'm not saying that will continue forever, but I am saying it looks to me like the saturation levels that we have globally are so low that we haven't even scratched the surface as it relates to being fully saturated into the human population. And, I'm again taking cues from the big boys in the room, like Larry Fink, like Citadel, like Michael Saylor, like, the smartest people around, in my opinion, are all saying the same thing. Jeff Park.
Well, had to throw that in there, right, Jeff Park?
I learned quickly.
I'm really great, really grateful and really excited that I could loan out my birthday to help you guys with that. So, to give it that launch day, I'm still upset you didn't name it the Inks algo, but the Bitcoin algo, that's okay. That's a cool second. I'll get with that. So, but yeah, and I don't usually push, other products that are out there, because, I've been doing this for so long, and I have such a unique way that I look at the markets. But, yeah, man, that Bitcoin algo really seems to do what a lot of people need help with. Whether they're traders or investors anyway, or they're just some guy or gal on the street that's just looking to try and do something to get a bit ahead with Bitcoin. I think it's an absolutely amazing way to go. And so, I continue to tell people, even if you're a trader, even if you're like in with us at TWC, you should always have another bag of Bitcoin that you don't touch, that you don't trade, that you don't do. Keep it away from your ease of access, but, continue to add to it, continue to do it. And, that Bitcoin algo is a really, really smart way, because most people don't know, and they'll get emotional, they'll get scared. They'll be, with prices up here, they'll say, well, when it gets here on a pullback, I'll buy. Well, it'll get there, and it's just sitting there waving, and they're like,
Well, it could get there at 3 a.m. Listen, John Deaton just yesterday, not yesterday, but the previous week when we were talking to him, he's like, listen, I had a buy set at XRP at $3 for several years, and I wanted to take some off the top.
A sell.
I had a sell at $3. And he said it happened while he was sleeping, and it happened so fast that the opportunity was gone. He completely missed what he wanted to do. Therein is the point of algorithmic trading. By the way, institutions that all use algorithms like crazy, that's why the markets are algorithmically driven. They never miss those opportunities. Never, ever, ever. And they haven't for decades. So as a retail individual, you now have access to these tools. You should use them. You should use them. You have the opportunity to be on a level playing field with a hedge fund, a prime broker, a huge global investment bank, whoever it happens to be. You have the opportunity to be on a level playing field finally, and especially in the crypto markets that are 24/7. In fact, you have an opportunity to be ahead of most of the TradFi folks that are just getting into the business of trading these markets. You have the ability to get ahead of them. So, you gotta just give it a shot, because it will surprise you and be like, whoa, this is remarkable stuff.
Well, we're not, and I'm a believer that, knowledge is power, and you can own all the ETFs that you want. I'm a big believer in the ETFs. But I also believe in owning Bitcoin and accumulating actual Bitcoin on a crypto exchange and being able to transfer, your long-term bag into cold storage is something that I just think is good practice. I just think if you're going to be in the community, you should understand the technology at that level. And this is the easiest way to have, a professional sitting there taking advantage of the volatility for you and doing it on your terms. You can absolutely program it to customize it to exactly what you want. We're here to show you how to do that and to help you do that and learn the features and the functionality. But this is a completely user-based tool. You're in control of it. We don't run it. We don't have control of any of the funds. This is the first time, if you've not used automation, where you're going to get your hands on it. And you're going to get to change the parameters. You're going to get to run multiple parameters on top of one another. But it's something that if you haven't experienced before, you should. It's free, and we'd love to walk you through it. I think ultimately discipline. If I gave this analogy yesterday to somebody, and it's like somebody comes to me and says, I want to get in shape. And I go, okay, I was an ex-athlete, so I know what it takes to get in shape. And they go, well, I'm willing to give 48 hours of my time to get in shape. Okay. Well, I mean, if you try to get in shape by running for 48 consecutive hours, you won't be in shape at the end of the 48 hours. But if you run 1 hour a day for 48 days straight, you will be in shape at the end of that 48 days. And so the discipline of just showing up every day when it's not convenient and doing something that's emotionally charged, hard, all those things, automation just removes all of it. It's like you're going to the gym every day and you're getting the workout, but you're asleep at home, not having to do anything to get the same results as if you're waking up and going 48 days straight. That's the best analogy I can give you, is like, once you experience this, because if you like, I have these things in my head, I go, okay, well, if Bitcoin drops to, I've got these lines. I watch Chris's show all the time. He's got all the crazy great TA. And I go, okay, I see where my entry should be. And I'm sitting there waiting for it. Or I can put a limit order on one of the exchanges and wait for it. This, you can literally have an intelligent buyer at that price point looking at market exhaustion parameters and finding exactly the bottom of a giant red candle to buy into. And you're doing it while you're asleep and not having to do all the math and not having to have the discipline of sitting there waiting for the right entry point. Like, it's just a lot of trading is just that stuff. And this makes it easy,
Yeah, exactly. So, hey, guys, if you want to download that, jump on over to archpublic.com. It's the Bitcoin algo over there. Be sure you're following these guys over there at Try Arch Public. That's their company site. You follow Tillman at TexasOL61. You can follow Andrew there at AP_abacus. I still don't get that, but okay. And you can follow me at TXWest Capital. You can check us out at TexasWestCapital.com as well. And be sure. Hey, listen, guys, sign up, follow me. I've got this whole creative project going on with the whole universe, that answers philosophical questions about Bitcoin. And we use a lot of the stuff that Major Jason Lowry wrote in his software book. And so really, if you're into Bitcoin, if you're into ideas of sovereignty, decentralization, freedom, stuff like that, and you want to see, you want to ask questions about, does it really work, or what could end up being other possibilities in there? That's what we explore there. You can sign up on the list right now, forkednations.com. Jump over there. I think we're finally about to get that out. It's been a heck of a thing.
I'll tell you guys the end of the book, because he let me read the copy he sent me, and the end of the book is that there's a seed phrase etched in the cornerstone of the Capitol building that's missing, and that's why they pulled it out. So you can skip to the end to thank me later. I do. It's like, Christopher, Gemini's fees are pretty bad on the traditional. If you don't sign up through us. If you sign up with our automation, and you're going to be going through their API, and it's 40 basis points in and 40 out. So it's 80 basis points, I believe. And that's as good as you can find anywhere. I think better than you can find anywhere. So just
pretty
FYI.
good. Yeah. So there you go, guys. If you're doing that, make sure you're doing it through them like there. All right.
I do like that one comment. I like how Tillman has no title. LOL.
He never does. Tillman has never had a title on here. What is it? 40
I like people that judge me for what I contribute in this moment. If I don't need a title, then making them thinking I'm important because I tell you I'm important. I either contribute or I don't. And if you guys think I suck, then no harm, no foul. Like,
I looked at it the other way. I looked at it like, I'm legit. I got a company. Andrew's legit. He's got a company. You're this guy we brought up the side of the road.
I am. That's how I like it. You know what? I even if I was a guy you brought off the side of the road, you should like being around me for who I am. If you don't, then pound sand.
All right. So there we go, guys. That's the end of it. Okay. We appreciate you guys joining in as always. We hope you've had an enjoyable time. Again, we take big subjects and sometimes difficult and boring subjects like TradFi and monetary policy and, bonds and all this kind of stuff. And, Bitcoin, and we kind of put it together and try to give you some great ideas about it. We'll find out what actually sticks as things go forward, but we've always got a narrative that's possibility that we're looking at. And we share that with y'all. And along the way, Andrew puts on a hat or 3 or 5, and we all get a good laugh. And Tillman has an analogy or 5, and I just sit here and question.
Don't encourage the hat thing. I'm building resentment. That's his way of undermining our comments non-verbally.
Oh, now I'm going to take it to another level. It's going to another level.
Listen, non-verbal communication is more powerful than verbal, and I'm picking up what you're laying down, buddy, and I don't like it. I do not like it.
All right, guys. Hey, thanks so much for joining in as always. I know everybody's going to be excited to see you guys coming back next week, and who knows, with something happening on we got somebody already taking a screenshot with you with the hat on and posting it on the internet there.
Yeah.
But anyway, hopefully next week, maybe Bitcoin kind of takes off by then and everybody's all excited again and about the possibilities.
Are you crazy? I hope it crashes and we can buy some more. Crash.
Because then people are upset and they don't want to watch the show.
Well, I'm not doing what most people do. I buy on the dips. I don't celebrate
watching the show. That's what I'm talking about. Getting our ideas out there. All right. Hey, listen, you guys have a great week. Everybody trade safe. Remember, the only thing you control is how much you lose. So if you're in the markets, make sure you're understanding proper risk management and you are utilizing it, using it every freaking single time. Because that one time you don't, I can all but guarantee you is going to be the time that you take that hit that wipes off everything that you already made. All right. All right. So you guys have a great weekend. Or a great weekend, then a great weekend, unless you're taking your weekend now, I guess. Tillman, Andrew, we'll see you guys later. Take care, everybody.
Great exit, Chris.
See you later.